Welcome to Making Money. This is Matt McCall. Thanks for joining you. I've got a special guest coming up on today's show. Somebody from in-house, a colleague of mine, Eric Wade. He's our in-house cryptocurrency expert, but he does a lot of other things as well. He's going to share today his view on Bitcoin and the action that's happened in the cryptocurrency market over the last several months. A lot of wacky things have been going on, from FTX to regulation. But at the same time, Bitcoin's actually held up really well. We're also going to talk about potential recession, what Eric's view is on that. And he's going to share a stock. You know, he does more than just cryptos, a stock that he likes, a stock that's been around since the 1800s, a stock near and dear to me, based in the city that I was born. And then, of course, the island pick, the one investment Eric will take for 10 years on the island, his favorite investment. All that and more coming up right now on Making Money. Most investors never touch this segment of the market, but according to the latest analysis from our team at Stansberry Research, this is the number one most important sector to pay attention to in 2023. And we're urging you to move your money immediately. You can stay one step ahead of the market and potentially unlock extraordinary gains just by understanding why this sector is set to boom. I strongly encourage you to read our analysis totally free today. It's all spelled out in a free report we just put together. Get the facts yourself. Go to hiddensector2023.com to get your free copy of this report. You can learn how to profit from the untapped potential in this hidden sector before it becomes widely known. Again, that's hiddensector2023.com for a free copy of our new report. All right, so here he is, Eric Wade. Eric, thanks so much for joining us. The first time in a show, so happy to have you here. Obviously, I've known you for years. We spoke on panels. We had I think the most widely liked panel at the last conference. We sat there, we talked about the market. I think it's me, you, Doc, Dan Ferris, and Matt Weinshank. That was so much fun sitting up there on stage.
It was. And thank you for having me. I was trying to think back, had we ever done any one-on-ones? And I don't think so. So yeah. This is going to be fun.
I know. It's when Greg, the producer, brought it up last week, I was like, holy smokes, we haven't. I just thought I had you on because we crossed paths on other things. So so great to have you on. And for everybody, obviously, I talked about what Eric does, but he's our in-house crypto expert. He's been doing this a long time. He's been mining. He's kind of insights that sometimes when I hear him talk, my head's spinning. And I think I know what I'm talking about sometimes. So the guy is a treasure trove of wealth, of knowledge. So it's amazing. So speaking of cryptos, Eric, let's just jump into that. You know, over the last couple of months, Bitcoin in particular has really held up well. Been trading around that 28,000, 29,000 level, which to me is a nice base and potential breakout level. How do you see Bitcoin and other cryptos, how they're acting right now?
Well, I've been trying to stay focused on macro. There's a lot of exciting stories and exciting new technologies. And hey, what if we tried this is going on in crypto? So it's clearly an exciting space. But I also think some of the big stories, some of what's pushing the most recent rebound, however you want to look at it, is that it keeps bending and not breaking. And we're in a world where I feel like a lot of people are searching for the what ifs, the just in cases. And we could talk more macro stuff later into this, but we're in this interesting combination that people still want to make money that they believe crypto Bitcoin can do, but we're also worried about a lot of things. And it's maybe a unique combination that people are thinking they can get multiples on their money, but also that the worst damage that's happening from our crypto excesses, right? We overgrow and we oversell. And so people are looking at that, and I think they're thinking, and by people, I mean up and down the scale, from whales to first-time users. And so for many of them, the first entry is Bitcoin, and maybe in a year or two, we'll start hearing a remake of that old saying, you never got fired for saying IBM. maybe that'll be what people are justifying. Hey, I got into Bitcoin when everybody hated it because you can't get fired for putting your toe into Bitcoin.
Yep. So the action that you've seen over the last couple of months, obviously in the face of FTX, in the face of, not directly correlated, but the banking blow up that we had, number 2, number 3 largest bank failures in the history of the country, increased regulation and talks of even more regulation on the crypto industry, and really just this kind of uncertainty and lack of trust that people have in the government and the banking system. So I guess you got a little bit of positive, a little bit of negative towards cryptos. How does this all shake out? Was there something there that will really drive it higher or lower in the next year or so, Eric?
Yeah, I'd like to think that the ability to self-custody is coming home to roost. That a lot of the bad habits, the extra tweaks, the conveniences that people had built for themselves. You mentioned FTX and banking, and it was sure convenient to be able to use a centralized exchange that could process your trades in milliseconds and leverage. That's another bad habit that I think we had maybe allowed ourselves to overindulge in. And I don't use leverage. I don't want to stay up 24 hours a day. So the people that can successfully do that, okay, more power to you. But this is what we got, right? We got something that was convenient and easy and had a lot of sex appeal to it. And we started losing some of our focus on what was Bitcoin, decentralized technology, decentralized ledger technology, and blockchain. What was it built for? It was built so that we wouldn't fall into that trap, but we led ourselves into it. So once FTX collapsed and the banks started following, and the old saying of when the tide goes out and you see who's been swimming naked, that really came home in a big way. And I think that I hope. I'm seeing a lot of people that I talk to that are saying we had this unique asset, this asset that we could self-custody, that we didn't have to leverage. And the people that leveraged the most seemed to be the ones that are paying the price. And that took us a couple of months to sort out. If you remember that the assumption was when FTX collapsed, the assumption was it could take down the entire industry. Mm-hmm. But a huge portion of our industry hadn't ever really dabbled. And I don't think I'm in the minority when I say, no leverage. There's a lot of volume, a lot of activity that is high volume and looking like it's traders. But there's a good, 85% or something of our industry that doesn't use leverage, holds their own coins. And I think what we saw was it took a while for maybe the lack of contagion. There was contagion, mm-hmm. but it wasn't as bad as I think everybody expected it to be. And that lack of contagion took a while to raise its head because it's the quiet money. It's the ones that aren't headlines and aren't putting their face everywhere. That it took us a while to sort that out. And now that we have, again, we're back to the bend but don't break sort of conventional wisdom, I think, of cryptocurrencies.
Before we move on to the next kind of asset class I want to talk about, 2 quick questions. One, the new people coming into cryptos over the last 6 months, and I think say the next 6 months, do you view them a bit different than what we saw over, during the big rally we had during the meme stock time? I felt like the people I spoke to then, Eric, were looking for get rich quick. Like they expected to make, 3x their money in a month. And if not, didn't work. I feel like people I talk to now that are either first timers or adding more money to cryptos, they're looking at more as a true asset class, part of their portfolio diversification. And then the follow-up, I'm first of all, I know if you see the same thing I'm seeing, follow-up to that, do you consider cryptos an asset class? Because I had Kevin Leary on a few months ago, and obviously he's bullish on Bitcoin and cryptos, but he did not believe cryptocurrencies were an asset class yet.
Yeah, I completely disagree with him. I mean, we have $1 trillion that it has its own identity crisis, right? I'm referencing the market cap of cryptocurrencies and blockchain right now and DeFi. we have $150 billion in stable coins that refuses to go back to fiat dollars, right?
Yeah.
Refuses to be rebanked. And you could look at that and say, okay, sounds like 15%, 20%, whatever of your industry thinks it's a money market, and 15 or 20% thinks it's a technology, and you've got some that think it's punk rock anarchy flipping off the system. And yeah, okay, you can't match up any other asset class with that, other than you can then say, I've seen some pretty good research that you mentioned meme, and I think people should keep that in mind. If there's one takeaway from this is Matt hit something really good there, is that Bitcoin and cryptocurrencies almost doppelgang or shape shift themselves into the zeitgeist, the flavor of the day. Cryptocurrencies did really, really well when healthcare stocks were doing really, really well during COVID. A lot of people never made that correlation, but cryptocurrencies are by no means a healthcare stock, right? But it was that once investors can get their arms around something, if we get to a point where truffle oil is the thing of the day, you're going to see cryptocurrencies try to mimic truffle oil. And that's to me, that proofs, and I'm trying to be ridiculous, right? Saffron, real estate, whatever it is, we're going to try to build our version and then take it a little bit further. And then we move on. It doesn't trade like healthcare stocks anymore because COVID is done. It's been trading like NASDAQ for a while. I think you and I were having a conversation that maybe that correlation is even waning, right? Because the investors bring that with them. So then to get back to your question of, are the new investors bringing something else with them? Absolutely, they are. And they're going to get to make their own mark on crypto. So I touched on that a little bit earlier, is that by being a global phenomenon, global technology, yeah, absolutely. You could have people from South America who see it completely different. I mean, there's a lot of places around the world that they view it differently, they use it differently, more day to day than we do, because Europe and America, we have a lot of things we're blessed to be able to ignore. Every time I turn on my bank app, it works, and the whole balance is there. So do I need to use cryptocurrency to protect my day-to-day transactions? I don't, but people around the world do. And you're absolutely right that there's a new generation of and okay, you're right for now, I'll say, because at this point in the market, yeah, people are coming on board because they believe in the technology, the promise, the escape route. But once we do get a couple of those 3Xs going, maybe we'll start to see that warm back up, where people start saying, okay, I came for the technology and I'm staying for the excitement.
Oh yeah, yeah.
The
You make a
cycle of
great point
cryptos.
there. Yeah,
Yeah.
you make a great point, because again, like the flavor of the day, it will come back, and you'll have, there's always people trying to get rich quick. So you're 100% right. I didn't think about that, but yeah, they'll come back. And you mentioned a correlation, and I have a chart up here from Bitwise that's S&P versus Bitcoin, and it goes back to 2011. And for the most part, Eric, through mid 2020. The correlation was between a negative 0.25 and 0.25, which obviously is very low correlation, which is great as diversification of portfolio. Spiked during COVID, came back a little in 2021, and then last year it got up as high as almost 0.74. So
Wow.
that's pretty, that's a real big correlation, which I didn't like that. I'm sure you feel the same as I did. I didn't like the fact that it was so highly correlated to the market, because I have quite a bit of my assets in cryptos, and I wanted that for diversification. I didn't want to move with all my stock positions. It kind of really made my portfolio much riskier than I implied it to be, or intended it to be. So I'm happy to see that come back down. Another asset which I know you like, and I won't say I hate it. I'm not a fan of gold, to put it that way. I think it's done very well recently, and there's nothing I can say about that. It's trading above $2,000 an ounce. It's done very, very well. But I did pull up a chart on last week's podcast, and I showed the chart year to date of Bitcoin versus the market versus gold. And of course, Bitcoin's blowing the doors off gold right now. I know you like both, and somebody made a case recently. I can't remember who it was. It was an old school mining guy, and he almost had me convinced. But tell me what you think, Eric. I know you are bullish on both asset classes.
Yeah, I am. I like gold. Gold. I know there's guys out there that can sniff out the next great junior mining stock or something like that, and those can be exhilarating. Obviously, right? Um, the wisdom behind if someone wants to pay for gold, then let's find the people they're paying to dig it out. No argument there. The gold stock guys, they know what they're doing. At least our guys do. I like it as an asset class. I don't mind taking some of the jabs for it, but I also think of it as perhaps I'm maybe this much gold bug because I'm one of those 1971 guys, right? That gold $35 an ounce, and I was on Danny's show recently. She pointed out that I'm one of the few people that likes gold and cryptocurrencies,
Yeah.
sincerely does. And I pointed out that when gold hits 3,500 an ounce, that will be the milestone of 99% collapse of the 1971 US dollars purchasing power. Because if we were at $35 an ounce in 1971, and now we're 50 short years later, we're knocking on the door of, we're not, I like gold or don't like gold. I think you have to admit, if Janet Yellen gets her $17 trillion bank backstop, it's entirely possible gold could hit 3,500. And I don't think I'm surprising anybody out there that likes gold when I say I could see 3,500. Well, you divide 3,500 by $35, it goes in there 100 times. And that would mean the US dollar has retained literally 1%. I'm not hyperbolating, I'm not exaggerating. At 3,500, so that's our target. When gold hits $3,500, that means the US dollar has lost 99% of its value versus gold. Now I know that's an old argument. It's an old argument because it's an old asset and it doesn't change. And what's going to be kind of interesting is the scramble as we're looking at inverted yield curve. 4 out of the last, let's see, since 1982, the yield curve the U.S. Treasury yield curve has inverted 5 times. 4 of those times, we got a recession within 6 to 9 months afterwards. The only reason that's 4 out of 5 is because the yield curve just inverted the 5th time recently. So there could be a recession in our future. We could be talking fall, maybe winter. We're looking at a recession, except that's political season, right? And that's the bank backstop. So here's the real problem with gold is once you start hedging and second guessing, where do you stop? The third guessing, the fourth guessing, right? It's because, well, are we going to get a recession? Do they want a recession, or do they want to spend their way out of it because it's political season? And if gold is the kind of hedge that I like holding on to, because if I'm not making money off of gold, it's because stocks are doing pretty well, and that's a price I'm willing to pay with it. So I'm not an exclusive gold fan. I'm not a gold bug to the cost of everything else, but I like cryptocurrencies, I like stocks, but I like gold here because it just seems to me like not having a fire extinguisher around or something, right? There's just so much uncertainty. I think like if we can pull out of an inverted yield curve without a recession and backing the banks, because banks are in trouble with the interest rates rising so fast. Who's holding the interest rates? The insurance companies. Who's holding the long bonds with the interest rates being affected? Insurance companies, banks. They're all hoping the spotlight doesn't come on them right now. So do we spend a lot of money to bail them out? And if we spend a lot of money, do we hit that $3,500 on gold? And does that mark the 99% collapse of the US dollar? Who wants that on their watch?
True, very true. And you look at the U.S. dollar chart of the U.S. dollar index right now. I talked about it last week. It's not looking good. I mean, we're about 10% off the high that we hit in late September of last year. And right around that time is when the stock market bottomed. I think around October 5th or 6th. So it kind of coincided with that. And I don't really see much that's going to push that dollar up. And I will back the gold people here right now because last year, Eric, I didn't think gold performed as well as it should have in the face of inflation and
True.
global uncertainty.
True.
But that being said, I'm going to be devil's advocate here against myself and say that you also had a U.S. dollar that was surging, which hurts the price of gold. And now that that's come down, gold has been able to break out above that 2,000 level. So if the dollar continues to drift lower, which I think it will, and you probably agree, that's also a great scenario setting up for gold as well. So I hope the gold bugs don't think I'm flip-flopping here, but I will say I don't hate it anymore. I can make a case for it. I just don't have it in my portfolio. I prefer to have some other alternative investments to diversify my portfolio, but I have nothing wrong with it, with it in a portfolio at all. I see the case for it and I agree with it. Obviously, you're an expert on cryptos. You love gold. You also have a newsletter that does stocks as well. And there's one stock you wanted to share with us that it's a stock that I actually owned when I ran Penn Financial Group for clients. I owned a stock for over 10 years. This is a stock that's I know well. When I owned it back in the day, it also had a lithium division as well, which is spun off a couple of years ago. But this company is FMC, a big chemicals company. So tell us why you like that stock, Eric.
Yeah, well, I have John Engel on our team to thank for uncovering this one because for the Stansberry Innovations report, and uh, he brought this idea out and said, what I'm looking at is, and I'm paraphrasing, but founded in 1883 and deals with agriculture. And you think in the innovations report, really, we're gonna you've got cybersecurity and you've got software as a service, and right, and we're looking at AI and we've got a whole blockchain section in the innovations report. But once you start looking into the case for it, that FMC, sure, that is true. They've been around over a century, but they're pushing the technology of pheromones for pest interruption, right? If we can keep, because the argument is, once there's a black cloud of locusts, or once your entire crop is covered with any kind of fungus or something like that, then the damage is done, right? But if you can use the pheromones, sort of a karate tactic, right? Use their strengths against them or Tai Chi, right? Use the pheromones that attract the pests to confuse them and to break their reproductive cycle to where you never get caught in the they got away from us stage. And with the weather up and down, and California, we're going from drought to water everywhere surplus, we're going to have pests to deal with. And so I think it's an intelligent way to pursue this is to think, can we change the life cycle? Can we attract the male bugs as simple as to one side of the field and the females to the other so they don't mate and prevent this? And there's a lot more to it. I mean, we have an in-depth 25-page research report on it. You yourself know, if you're familiar with FMC, there's a lot more to love about it, especially the fact that they're financially doing really well, right? It takes more than just a good idea to succeed. But having a 100+ year history and yet on the cutting edge of science, that's attractive to us.
And I will throw in two other things. I mean, I'm looking at the financials. I mean, it's a highly profitable company, going from, made about $7.41 last year. Estimate for 2025, $10 a share. That's big growth for a company that's been around that long. Trades at a forward P ratio of 13, forward price of sales of 2.2. And the best part about this company, it's headquartered in the greatest city of the world, Philadelphia, Pennsylvania. So how can you go wrong there? My goodness, Eric, he's got a little bit of everything. But I think, this is a company that I owned for clients for probably over a decade at one point. So I love it. And I like the way where it's trading right now. It's pulled back a little bit off the highs. That's the time to buy. So I think that's a really great idea.
Yeah, we think if you can get in under 125, you're good.
Yeah, it's at around 116 or so now. I think it looks great. So one more thing before I let you go. in looking through your notes here, and the big R word is in there, recession. So what are your thoughts on recession? Are we going to have one? Is it going to be a soft landing, hard landing? Do we get out of it pretty quickly? Is it priced in? There's a lot of different ways we could look at it. I'd love to get your view on that, Eric.
We touched a little bit on that with gold. Maybe I shot my shot my shots too early on that. I don't see how we can avoid it. Numerically speaking, whenever you get an inverted yield curve, it follows with recession. We've got this combination of paying more for things, and yet the government wants to fight inflation, maybe slow the economy down if they can, maybe get some people out of work, etc. I don't believe that we've really found where the excesses are. In crypto, we did. That's behind us. Crypto front ran all of this. Crypto works on more of a 4-year cycle, so we get to break before everybody does. But the real economy, we had those bank scares, but that hasn't completely played out yet, right? So is it going to be banks that bring us down? Is it going to be car lending? Is it going to be home building? Right? What is it that has a story that hasn't been told out there?
Commercial real estate, maybe, right? You can
commercial real estate. Yeah, we've got somebody out there. We've got credit card balances starting to rise. I think record levels of credit. So people are paying their bills on credit cards, etc. Something's got to break, and it hasn't yet. So if we can avoid recession, I think it's going to be gamesmanship. I think they're gonna game our way through it. I haven't been shy about saying that I think we've cooked the books on our tracking numbers, our American departments of tracking things. I'm not going to say any one particular Bureau of Labor and Statistics, things like that. They may avoid a recession by misrepresenting something. That's the best I think we can hope for as a soft landing, is something that if our government can figure out which division of our economy is due for breaking and prop them along and fake the numbers long enough, because again, we're in political season and we're a very divided country. Nobody wants to take the L on this. Absolutely nobody wants to be the one holding the bag, especially now. You've got conflict in Europe. You've got trading partners that are breaking sanctions, right? We've got all kinds of things. Nobody wants to take the L on this. So maybe we'll get a soft landing, because if they get the numbers anywhere close to it, they'll fake them. And I'm sorry to say that I have so little confidence in that. I can't imagine anyone who watches your show that I'm shocking them to say that this is a possibility, right? But that's one reason why I love blockchain and crypto, is because it's not beholden to that. And as soon as we figure out that something is being misconstrued or faked or gamed, we can build around it, or we can punish it, or we can integrate it or something, right? But I don't have that kind of trust with American numbers. So will we get a recession? Only if it happens so fast that they can't game us out of it. I know I danced all over that, but I think what's more likely is they're gonna dance their way through it, any way they can, and then just do a Google search for restated, that so and so restated their Q3s, or so and so restated, and watch that number start rising. We're going to see a lot of restatings. We put the news out, win a news cycle, and then come back a month later, 2 months later, and restate some numbers. And I think that may get us through it. But look around. I think people know that, well, credit card debt doesn't lie. That's a big one right there. And commercial real estate, good point there.
I'll be honest with you, Eric. I thought we were in a recession last year. I was always taught the definition was 2 quarters of negative GDP. But
you
then
were probably right.
when we had that last year, then they said, no. You also have
Yeah.
the jobs market's too strong. It can't be a recession. Because again, nobody wants to take the L. Nobody wants to be
Yeah.
in office when a recession hits. So I could care less what the government says. If they tell us we're in a recession or not, it doesn't matter to me because the market will figure it out. The way the market's trading, the way the economy looks, that tells a damn story. I don't care. I don't think you know my political view too much, but I'm anti-politics. I walk down the middle and I don't like people on left or right. I'm so apolitical these days. It just drives me bonkers. Working on Fox News for over 10 years and meeting these politicians and seeing, the ones on the right shake my hand, give me bullshit. The guy on the left shakes my hand, gives me the same bullshit. And then those two guys go in the green room and shake hands and they're kumbaya. But
Yeah.
on TV they hate each other. They're all against us. They're supposed to be working for us, but they're against us. And I don't want to go on a rant too much, but I agree 100% with what you said. I'm glad you said it because you said it very eloquently in a way that I get too fired up and I just start screaming. So you said it very nicely. So I thank you for doing that. Before I let you go, we're running a little late here. I ask every guest what I call the island question, Eric. And if I were to send you, your family, friends, whoever you want to take with you, take me with you, sure, to an island for 10 years, what's the one investment? It could be an investment. It could be an asset class. It could be cash, whatever you want. What's the one investment for the next 10 years? You feel great. You put it underneath your pillow. And when you come home, it's going to be looking good.
I'm going to bore everybody. Bitcoin. I ride and die, ride or die, ride or die.
Or die, yeah.
There's no way as imaginative as I am. I love the halving coming up. I love that it'll be under 1%. Boy, do I love compounded dividends, and Bitcoin doesn't give me that. But I'd be willing to give that up for the certainty that, and a lot of that comes from if you're keeping score. And I ask my crypto capital subscribers this from time to time: is if you're keeping score with dollars, is that different than keeping score with, say, number of Bitcoin, right? Like your house, do you keep score with how your house is valued periodically, but not day by day, not from 6 a.m. till 1 o'clock in the afternoon. You don't look at your house value rising and falling, right? So if it had to be anything, I'm sorry, it's got to be Bitcoin, because I don't know what the rest of the world is going to do around it, and I may come out of this with X number of Bitcoin that nobody cares about, but I'll still have that X number of Bitcoin. You can't corrupt them. Yep. I would obviously self-custodied Bitcoin. I wouldn't trust them to an exchange to be there when I come back 10 years later. So, but then the flip side of that question, obviously, though, is if you come back 10 years later and everything is fine, then what do you wish you had bought? And maybe that would have been S&P 500 or something, right? Yeah. And let it compound. At that point, if something breaks, I wish I had the Bitcoin and a crowbar. If it doesn't, I'll say, oh, my hedge cost me a lot of money. So, but
even I can tell you, even if things don't break and they are good, and there's not many 10-year time frames over the last 100 years that the market's down. For the most part, it's up over any rolling 10-year time frame. There's a few that's down, but even if it doesn't break, Eric, I still think Bitcoin will be much higher in 10 years from now. Even if it doesn't break, I just think that the base case for it is just so good. And I love the answer, and I'd say of doing this about a year and asking every guest this, I think Bitcoin's probably the most popular choice in that question. And I never given my answer. Maybe one day I will, but that's going to be in my top 5. Bitcoin will be in there, and I prove it with where my money is now. You look at my portfolio; it's in there now, so I can, I put my money where my mouth is, and I think it's a great answer. I don't think it's boring at all.
The scarcity is intoxicating. Just like when you do the math, I think you're like I said, I'm willing to forgive other shortcomings like compounded dividends or something like that. I'm willing to forgive that because of the mathematical scarcity of it, that you'd have to break Bitcoin to change that. And that we haven't gotten to a point, because we're at what, $500 billion market cap for Bitcoin or something. We haven't gotten to a point yet where I think we, other than the imaginative folks, the lion's share that don't ever trade their Bitcoin, but the rest of the world, it's so liquid. The traders think there's plenty.
Hmm.
The guys that are high frequency traders, it's very, very liquid. So it doesn't come across like it's that scarce. I mean, imagine I'm over talking the time you gave me, but I looked into rye stones at one point, right? Those huge stones from the islands. I looked into that
Yeah.
thinking I should own one of those, almost as a half serious, half joke, because it turns out they've actually held their value pretty well. I'm not telling people that, hey, I'm thinking rye stones is the best thing I'm
Yeah.
literally saying half as a joke, half serious. But that scarcity, right? The number of them that are out there, you can't find them easily for sale. So even if you wanted to follow me into that trade and say, hey, that is pretty funny. What if I had a rye stone on my shelf behind me? Try
Yeah.
finding one. Okay, well, Bitcoin doesn't have that problem. And I think it fools people into thinking that there's a lot more out there available, because the exchanges are all trading them so fast, so much of it. And we've got futures on them. It seems less scarce than it really is. And we haven't ever had to answer to that yet.
Hmm.
So I think at some point we're going to start finding out who really, well, FTX, right? Who really
Yep.
holds what they claim they're holding, et cetera.
Yep. Well, I think that's a great answer. And obviously we went long, but this because you had great discussion. I really appreciate
Hey,
you coming
it was
on.
our first time together. So
Exactly, exactly. It's a good first date. It's always
yeah,
nice when you can keep talking. But we'll have you back on soon, obviously. I'll see you at the conference, obviously, in October. We're
yeah,
going to
looking
start
forward to it.
doing some pre-sales for that coming up, which would be great. I saw the lineup. It's going to be amazing. And hopefully we do our little bull bear panel again and get up there. But I just want to thank you
Vegas
so
this time,
much.
right?
You do, yeah, yeah, yeah. You do such a great job
Thank
with
you.
everything crypto. So if
Thank you.
anybody's interested in cryptos, please check out the products. We'll put links below right now. But thank you so much, and we'll get you back on soon.
Absolutely. Thanks. Thanks for having me.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.